Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Well, welcome back. Scott Kelly, CEO and founder of Black Dog Venture Partners and your host for the Emerging Managers Podcast. Today we have Wally Wang, the founder and CEO of Scale Asia Ventures. And he's going to discuss his background in machine learning and AI, working for great companies like Microsoft while he was pursuing his PhD. Before moving to Silicon Valley in 1984 to join a Y Combinator startup. And he took this background and he launched Scale Asia Ventures in 2021, focusing on early stage B2B software, specifically pre-seed to Series A and beyond, with the unique value proposition of connecting his portfolio companies to his network of folks in the U.S. and in Asia, particularly South Korea and Japan. You'll learn in this interview how that provides a real opportunity to give these portfolio companies the ability to grow and scale worldwide. The firm acts as a multi-stage partner, offering holistic solutions from early stage investment all the way up to M&A and IPO. So he works with the companies from the beginning of the investment all the way to the exit. And he's had some great exits. He's had Pagea exited to CrowdStrike for $260 million, and Krista, a call center, did extremely well, bringing in a lot of capital back to the founders and to the limited partners. And he emphasizes his strong DPI, distributed to paid-in capital. One of the key factors that make these emerging managers, a better, a more viable opportunity. And he has a great track record to use this strategy of investing holistically, using his relationship in Asia to help his portfolio grow and expand, and then helping them on the exit, which obviously is the goal for anybody investing in venture capital. So give this podcast a listen, and we'll be back to share more about some takeaways you heard from Wally and Scale Asia Ventures. Well, everybody, welcome back. My name is Scott Kelly, the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And today I'm excited to introduce Wally Wang of Scale Asia Ventures. Welcome, Wally.
Thank you, Scott, for having me.
Well, Wally, before we get into the fund, why don't you share a bit about your background prior to launching the fund?
Absolutely. So I have a machine learning and AI data science academic background. I worked at Microsoft in the beginning of the Bing search time. So I was building a lot of the optimizations and machine learning models there. And then I pursued my PhD at NYU Stern School of Business, doing research in applying AI to business settings. And 2014, I moved to the Bay Area, Silicon Valley, and joined a Y Combinator startup as a founding data scientist. So really applying the AI and machine learning into solving some real startup problems. So that company, we sold to Fitbit and later on to Google. So I've been really tapping into the Silicon Valley ecosystem around 2014. So I've been also angel investing in Y Combinator and also the accelerators here in the Bay Area for over a decade. And later on in my operating roles and career, I've also started and working on B2B software space in a company called DataVisor. So we build anti-fraud and fraud detection solutions to large fintechs and banks. So that's where I really start to focus on software and B2B software. So hence that involved to my, after we kind of like exited that and we moved on to, I'm searching for, what should I do next? I moved to the venture world, really focus on software B2B as my sector focus. And I've been advising family offices and also conglomerates, corporate ventures for a bit, preparing for launching my fund. So I started my fund at Scale Asia Ventures in 2021. We have been investing since then for the past 4 years.
Share a little bit about the thesis. Obviously, you had a great background in AI and SaaS and software.
Yeah.
Talk about the fund thesis. What stage are you investing in? Maybe industries and things of that nature.
Absolutely. So, because I've been, involved in the ecosystem for over a decade here in Silicon Valley, so when I start the fund, I'm always interested to figure out what is my unique value proposition to the startup founders. How do I differentiate from other GPs out there? So I see a few opportunities. One is that I'm a researcher and operator turned investor. So I want to get involved in the more like a day-to-day or product related operation side of the business. So really getting to know the founders, working with the founders early on is important. So that's why I started with early stage, investment focus. So we have been for the fund that I'm currently deploying for my third fund. We have always been focused on pre-seed, seed, and up till like pre-A, Series A stage. When the company just about to find the PMF, the product market fit, and just start to try to scale the business. So that's where I started to really figure out, how we can amplify my prior experience to help a bunch of companies. So that's a one unique propositions and really be a friendly investor. And then specifically around the fund strategy, we have seen a missing kind of support, especially from the corporate side. When some of the B2B software companies trying to scale their business, they want to talk to large enterprises. So that's where I have some background in successfully as myself selling to large enterprises, but also I've been advising and investing with corporate ventures for a long time. So I know a lot of the corporates worldwide, not just here in the US, but also in Asia, primarily in South Korea and Japan. Hence, we collect some LP investments from those corporates. So one of our investment thesis is that we can bring a lot of the corporate network and resources to our portfolio company, whether there's, figure out early on partnerships with the US partners or later on go to Asia. We can introduce a lot of the strategic largest conglomerate out there. So that's a second unique propositions we can bring to the value. And especially when you talk about B2B software, traditionally not that many like companies doing this, like Asia, US, cross-border type of opportunities. People mostly have seen that in semiconductor or more hardware related industries. So we have been really pioneering of bringing some of the gap and bridging the US software companies with the Japanese and Korean market. So the last piece, I think when we started thinking about the fund strategy, we are really wanting to do a platform play. So we start with the early stage investment focus, where we already have over 80 portfolios in the past 4 years. So every year we do another, 20 plus new companies. So overall, it's a good coverage for us. We've seen a lot of companies, we can partner with them early on, but we also support them from the growth to later stage point of view, where we, as I mentioned, we introduce strategic markets to them, partnerships with them, but also we can continue to support selectively on some of our portfolios, but also outside our early stage portfolio, we also have a growing number of growth to later stage portfolios. And in those cases, we are not using our main fund to invest. We are using our later stage fund vehicles, mostly like special purpose vehicles or other, case funds to fund those opportunities so that we can be a multi-stage firm that we can support the startup throughout their life cycle. And we are also very close to a lot of the investment bankers that we can also even helping them preparing for eventually a pre-IPO round or IPO, as well as figuring out M&A strategies, etc. So we try to be a holistic solutions and capital partner for our portfolios.
No, that's fantastic. Obviously, you provide much more than just capital. Obviously, relationships, experience, operational side. And it's nice to see that you follow on with your investments. When you find a new founder, what are some of the attributes that you look for in a founder that you're going to invest in?
Yes. Yeah, that's been the hardest question. We've always, debating and thinking about it all the time. And it's shifting, through the years, because of the technology progress. So when we started the fund back in 2020, 21, 2022, when there was like almost at the tail end of the software or SaaS cycle, we were fortunate to invest a few like serial entrepreneurs and founders that really know what they're doing. They've been through the journeys. They've probably even sold the companies before. One of the companies that we have invested back in the days, there are a few cybersecurity investments that we did. One is in the API security gateway. They got acquired by Imperva, a public company, just like 6 months after our investment, because the founder, has been started a few companies, and before that, it was a company went public. And yeah, we have another very similar profile that has sold companies to his prior company to Palo Alto Network, and he started another business and is also get acquired. Just last month, they announced a $260 million acquisition by CrossTrack. So yeah, in the last era, I think repeat founders and people with the relevant experience and know-how in that specific technology domain certainly is what we're looking for. And we have been still, pursuing founders in that area, in that bucket. I think especially around AI infrastructure, like semiconductors and compilers, softwares, there are still a lot of repeat founders opportunities. But more and more so when we are evaluating like more AI, generative AI, native applications and new opportunities that are created by the ChatGPT, we see a overwhelming of new first-time founders and really fresh off the gate founders, dropout students or, just spend a year or so in big corp large tech firms and decided to launch his own business. So there's a lot of great examples, and we have backed quite a few in the application layer, both in code generation, legal, video generation, health tech using generative AI. Yeah, there's a lot of success across those application layers that we see. Really first time founders can move fast, figure out the best way, and especially they don't have any burden or so-called best practice, but might not be useful anymore. So they've been really nailing down new go-to-market strategies and growing really, really fast. So we have been pivoting. You can say that we have been a little bit pivoting in our searching for the founders.
So, obviously, you're in Fund 3. You mentioned some examples. Talk about some of the success stories. If you can name names, companies that have been really good success stories, and maybe some companies that you're excited about the opportunities, going forward.
Absolutely, absolutely. I have mentioned a couple I'm putting on the logo wall. I don't know if it will be.
I can see that.
Absolutely,
Absolutely.
yeah. So this one, the Pangaea on the bottom left, that was a cybersecurity company that got acquired by CrossTrack last month, $260 million. The reason for that is CrossTrack want to become AI first cyber companies, and they have been expanding their product offerings by acquisitions through the years after they went public. So they continue to do that, and I think Pangaea will be a very important building block for them to really tap into the AI cyber world. And upper in the left up corner, that is Cresta. That is a call center AI startup. Gigantic space, $450 billion spending yearly in call centers spending, and AI, a voice AI has been already been developed to maturity and really seeing a explosive usages and applications across various industries in both inbound and outbound calls, sales calls or customer support calls. And Cresta has been growing very, very quickly over the past 2 years because of that. And they have also largest customers in the world. And we have introduced a few strategic investors and also customers from Japan, which they're expanding into. We have also Solve Intelligence, which is a legal tech company, and they're growing really, really fast. In about 2 years, they've grown over $5 to $10 million. Really seeing the quick adoption in the professional legal space that has not been so successfully, penetrated or been, that technology is savvy traditionally, but this AI wave has really changed that industry. We have also a few in the physical AI and IoT robotics space that we really are excited about, and we want to fund a few more. Butler here is a IoT and AI people sensing indoor sensing technologies using the latest AI models, and they are able to detect people movement predictions on the people's movement for senior care, for real estate management, for indoor safeties, for retails, etc. So there's a varieties of applications that are building horizontal generative models. So we have continued to look into new kind of frontier applications where the generative AI will be able to disrupt that industry. As you can see, we invest in a varieties of different industries.
That's phenomenal. So let's talk about the makeup of your LPs. Who are they? Not by name, but what's the makeup of the current investors in, your current fund? And we want to talk to potential LPs and co-investors with you. So let's talk about who they are, the type of people they might be.
So we have half of our LPs are coming from the US, and they are mostly family offices and also fund of funds. So we've been partnering with some of the largest family offices and also fund of funds programs here in the States. The remaining half of our LPs are coming from mostly from Japan, Korea, and a little bit from Singapore, Southeast Asia. The LPs, they're large, well-known conglomerate, including, for example, in Korea, we have Shinsegae, one of the largest retail conglomerate. And there's, before that, it was part of Samsung and then spin off. And we have such many conglomerate and also public companies from South Korea. And in Japan, we have some of the largest internet companies, founders and their family offices and their corporates investing in us. And we also partner with a few of the strategic service providers or resellers, you can say, like software resellers or service providers in those regions. The reason why they invest in us is that they've been selling like AWS or Google's cloud services for years, and they want to find the next growth in their product offerings, and they want to sell more cloud infrastructures or AI applications, and that's where they found us as a perfect GP to partner with.
Okay.
They don't find any much of US focused software focused GP fund that do has a Asia link. So we've been really fortunate to partner with quite a few of those strategic investors so that we can bring some of our portfolios over to those strategic, those regions through strategic partners.
Fantastic. So for people listening today that are potential investors in your fund, either the current fund or future funds, whether that be family offices, high net worth, wealth managers that are managing portfolios and investing in alternatives. So why your fund? Why Scale Asia Ventures? Why now?
Yeah, that's a great question. So let's talk about some of the the metrics or the correct the results that we kind of shown across our prior two funds, and so it will be the same. It will hopefully be the same going forward for our third fund because we use the same strategy. So when we start the fund, as I mentioned, we really figure out what are the unique angles and areas that we focus on, including collaborating with the corporate ventures and corporate worldwide corporate ventures by partnering with them and really accessing a lot of the largest tech companies and go global for Fortune 500. We understand what is their future growth need. And that in return, we are looking into the companies that filling some of the gap. That is exactly what is happening right now in the AI field. As you can see, in the past years, there are so many acquisitions happened in the generative AI space that got acquired by a varieties of large companies, not just in technologies. Like NVIDIA acquired tens of companies last year, but there's also many companies in legal space, in healthcare space, in more of a traditional industries that they have been also looking to acquire some of the early startups, like companies with some revenue, small sized companies getting hundreds of millions of acquisition offers. That is exactly our strategy for the first two funds, and we have been proven over the years of distributions of our fund. So we are at a very good performance compared to the benchmarks of the other VC funds in the same vintage, that we have much higher DPI distributions compared to others because of our early on exit by acquisitions by the largest companies. So I was using cybersecurity industry as an example. We have a few that got acquired, but there's a varieties of other verticals and industries that are also wanting to acquire AI startups for this couple of years. So that play has been working really, really well for us. So that is one important thing is that we have even as an early stage fund, but we have a very good DPI's track record, and we've been demonstrating that our strategy really works because we really knowing what will be required, right? What are the areas that will have the potential to get early on acquisition offers? And as I mentioned, because another thing to boost our performance that because we are a multi-stage firm, so we've been able to really, really see what's going on later stage as well. What is changing in the dynamics, and we are always very result driven, trying to figure out what's the best way for our founders. So we proactively introducing M&A bankers to our portfolio founders if they're ever thinking about because you never know the best timing to sell is you're not selling, right? You really need to plan ahead. You never say no. Like if there is a good offer, our founders will be realistic. I mean, there's a varieties of different opportunities happening right now.
Right.
So that is why we are kind of not as a small like angel early stage funds that are just waiting there for the exit events happening in like 10, 12
Right.
years. We are very proactively pushing and hopefully get generating some early on liquidities for our LPs. And that has been working pretty well. And plus, I think another thing I want to really emphasize is that our unique cross-border strategy, although 100% of our portfolios are US-based companies, but we very much like a lot of the first generation founders, Chinese Americans or Korean Americans or European Americans. We have backed a lot of European founders. A lot of European founders came over to Silicon Valley, Israeli founders, and British founders. Yeah, there's a lot of great schools out there, a lot of great researchers in AI, a lot of great AI, development out there, but the market is here in the US. So we are, as a cross-border fund, we are more closer to the entrepreneurs that has some international background, and hence they are also maybe more open to take our money. And also, when they're thinking about expansion, they are more open than some of the domestic players. So that hence the companies might be even bigger and larger and grows maybe a little bit faster, especially taking advantages of some of the cost benefits of having an offshore R&Ds or offshore support teams that we have seen, as well as, for example, the physical AI. You need some hardware expertise in your team, so a cross-border team might also be working very well. So by looking at our fund strategy, we are really tapping into that, cross-border type of unique entrepreneur profile. Hence, they might have pretty good results. In fact, if you look at the unicorns here in the US, unicorn companies, I think over 60% of their founders have at least one foreigners, like expats that has been, of course they came to the States, but they're immigrants, like first generation.
So any final thoughts that you want to share with our listeners today?
Yeah, I think AI is a great opportunity. I think it's really right now depending on the right team. And by partnering with us, we have been proven our capabilities of really tapping into varieties of very unique founder profiles and industry coverages and unique innovations opportunities. And we have to be patient in our overall. We are very hopeful for some of quite a few of our portfolios will grow into generational companies, decacorns, etc. And then we are also seeing a strong push of those startups that are threatening the public companies. So if you are only investing in the public companies right now, you will miss some of the opportunities because the challengers is coming. And there's enormous opportunities and paradigm shift that we have seen across a varieties of industries. So yeah, so we're very excited about what we're doing. Yeah,
that's great, and I love the fact that you're proactive from beginning to the very end. That's fantastic. So where can folks learn more about Scale Asia Ventures and get in contact with you?
Yeah, so our website is sav.vc. You can just look into our website. We have a lot of good information out there about our portfolios, about our background, about our team. And yeah, feel free to contact me at wally@sav.vc. So that's my email, and feel free to get me on LinkedIn. Yeah, so happy to keep in touch.
Fantastic. Wally, thanks for being on the show today. For all you listening, I encourage you to, track what Wally's up to at Scale Edge Ventures. As always, like, comment, and share this podcast and the Emerging Managers podcast. And again, Wally, thanks for being on the show today.
Thank you, Scott.
Welcome back. I was really intrigued and inspired by Wally's cross-border strategy and his approach to help these companies succeed. Scale Edge Ventures, SAV, the fund has a unique opportunity to take these companies and bridge U.S. software companies with the Asian markets like South Korea and Japan. And he leverages his network of LPs that are not only providing capital for the fund, but are providing access to these valuable markets. And, he mentioned his multi-stage approach, helping them from the early stages to later stage fundings through special purpose vehicles, a term we've heard many times, and that many of the funds we've talked to are using to do follow-on capital and get more participation. Yeah, and Wally, like a lot of these emerging managers, is providing that operational and product-related support. They're deeply involved in the day-to-day product-related aspects of the business. And these are critical because entrepreneurs obviously want to get capital, but they want to have guidance and they want support and they want connections. And so Wally and his team of LPs very much provide that. And as we talked about in the beginning, he has a very proactive approach on the M&A side to help these companies grow. There could be really good opportunities to take these portfolio companies and get them to a liquidity event as soon as possible. And he's very proactive in this productive and proactive exit planning. So listen in to these podcasts. I encourage you to like, follow, and share. And we'll see you again soon on the Emerging Managers podcast.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.